Right. So the conversation that we want to get to have is of what we call the pet cash book, right? Most of the times you may find a question on the pet cash book, you know. So now the question is that when you are presented with a question on the pet cash book, what do you do, or what are you required of doing? Just confirm you are able to see the screen, right?
Yes.
You're seeing what I'm writing?
Yes.
Oh, thank you very much. So a pet cash book. Now, as the word itself may suggest, the word pet means what? Small, right?
Yes.
The word pet means small. So this one is a small cash book. Now, let me explain what happens in practice. In practice, when you come at the company, usually the company has got two major sets of expenses. Usually there are those expenses that involve a lot of money, and are those that do not involve a lot of money. Follow nicely. So usually the bigger expenses are controlled by what we call the senior accountant. You get the point, eh?
Yes.
The senior accountant manages these bigger amounts, these expenses that deal with a lot of money. For example, the company can sit down and say, all the expenses that involve more than 100 kwacha, as long as it's more than 100 kwacha, for example, it's more than 100 kwacha, that one will be regarded as a bigger expense. So it will be handled by a senior accountant. However, there are those other expenses that are less than 100 kwacha. For example, an expense of 2 kwacha, 5 kwacha, 7 kwacha. What do you do? 1 kwacha, you want to buy a pen, 2 kwacha. What do you do? Then we say that such expenses, they should also be handled separately. You understand?
Yes.
Yes, they have to be handled separately. And instead of having only one person handling that, we can get a certain person and call them a junior accountant. You're following, right? The junior accountant will be responsible of these small, what you call petty expenditure. So this is what will happen. This junior accountant, what he will be doing is that he will be the one now to be seen when you want maybe to buy a pen, just those small things, you know, stationary things, small expenditure. As long as the transaction is less than 100, you have to go and see him. Have you understood?
Yes.
Now, this senior accountant records his records in what you call the main cash book. This one is the main cash book. And I'll talk about it. We'll even give you an example. Then the junior accountant records in what is known as a petty cash book. Have you understood now where they come from? Like, yes. So a petty cash book, yes.
Does these other types of inventory fall under the petty cash book?
Like which types of inventory?
Like a stapler.
Oh yeah, as long as it's less than maybe 100, whatever. Like the question will be very clear as to what amount is regarded as petty. You understand, right? You will see when you do the exam. So the question will just mention that all the expenses that are less than this amount go in the petty cash book. Just know that that's the threshold. You okay, eh?
Right. Yes.
So this is the difference. I think now you've gotten the idea of where the petty cash book comes from. Now let me explain how the petty cash book works itself. Now I want to talk about the petty cash book. The petty cash book works like this. This junior accountant, let's say they are going to specify a certain amount of money that he will be working with in a month. You're following? Yes. So say the junior accountant will be working with maybe, let's say, 200 kwacha. This is the money that will be allocated to him to spend in a given period of time. You understand, right? So this is the money that is working with. So everyone who wants to borrow a pen or what or chan, they'll be borrowing from the what? The 200. Are you following? You'll be
Yes.
just getting from the small amount, the 200. Now, when you get this amount from the 200, what will be happening is that this amount is decreasing, is reducing. You understand, right? Until maybe you just remain with a 5. Let's say 5 kwacha or $5. Then now, what happens at the point where this person, follow nicely, this person wants to buy something which is higher than what is available, higher than $5. This person, the accountant will need to go to the senior accountant and ask for some extra money. You get the point?
Okay.
That extra money that they will do. Now, listen carefully. I want you to understand so that when you start doing the example, you are not getting stuck. That extra money that he's going to get, right, is going to be like, is just going to be a replenishing amount. Remember, the threshold is 200, right? We just want the money to cover up $5 that we have, so that when we add that amount, we have 200. We're not exceeding the impressed amount. This 200 is called the impressed amount, okay? The amount that is allocated is called the impressed.
All right.
So now, like if you have, let's say $5, so you need how much? 195 to make 200, isn't it? So when you go to the senior accountant, he is not going to give you 200. He will just add the shortage. You understand? That is called, exactly. That is called restoring the cash book.
Okay.
Even when let's say we have come to the end of the month again, we need to receive some more money. Again, the junior accountant will report, this is how much we have so far. We remained with from the previous month. Then the senior accountant will say, what is the shortage to the impressed? Then he will just add the shortage. And you continue spending like that. Did you get the idea? Have you gotten the idea behind this process? The petty cash book. I'll give you now an example. All right. Okay, sir. Now let's go to the example. If I'm speaking so fast, you tell me that, sir, you're speeding up. Maybe you can slow down. I can always slow down, you know?
All right.
Yeah. Let's come to, I want to pick the example quickly. Let me pick the example so that you know, we learn easier by examples. Someone just says things without giving an example. Someone will say, no, sir, we have not understood what you are saying. Okay, are you able to see the screen? This is an example now. Riding on the same concepts that I've given you. Listen carefully. Shivan maintains, what does he maintain? A petty cash book. Using the impressed system. Impressed system simply means setting aside a certain amount of money. And the impressed amount is what?
200.
200. And it is usually restored every what? Every Wednesday, which means the period is just 1 week. So it has to use 200 every week. You understand? Okay. So we have known the impress. Now we're saying that all payments of less than $75, they are made from the what? The petty cash. And all the receipts of less than $75 are paid into the what? The petty cash. Have you seen what I was telling you? That the question will be very clear.
Yes.
About how much is regarded as small and how much is regarded as big. Now, you are told that on 1st of March 2023, this person had how much in their petty cash box? $61. But the interest amount is supposed to be how much?
200.
200. You get the point, right? So when they
Yes.
when they started the period, already had the 61. So they just needed the shortage to cover up. You understand?
Yes.
So he provided the following information for the first week. Number one, he restored the paid cash interest from the business bank account. I explained what it means to restore, isn't it?
Yes.
What does it mean?
It means to refund the money back, to put back
Exactly, to
the
add.
shortage.
Exactly, to add the shortage. So the question is, the point is that for first of that month, they had to do what? To do the restoring. And then from that, on the second, they now paid after restoring. To trade payables, they paid for taxpayer, they paid for notes, for notepads and pens, and they received the cash. Then now I'm interested in what is required. The required is to prepare a paid cash book for the first week. You understand, eh?
Yes.
But look at how interesting your question is. The question they have already given you the expenses analysis column. Are you able to see what I'm trying to share? Though it's upside and down. This side is what we call the expenses analysis column. From the total paid, are you able to see the total paid?
Yes.
Going to the right, here, this is where you record on the column for total paid. This is where you record everything that you have what? You have paid, you understand, right? Yeah, everything that has been paid. Wait, I count the columns. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Anyways, you have seen the way how they are. There are 7 columns. Now, I want to draw them again on the other side that you may understand. Are you able to see my board?
Yes.
Let me draw. There are 1, 2, 3, 4, 5, 6, 7, right?
Yes.
So now let's start labeling. This last part is total received. I'll just write TR for total received. Total received. This is where you put the total receipt on the left, the first column. Then the next one is the date. You don't need to memorize this because the question, I've showed you that the same question paper has this format already.
Yes.
So then you have got total at paid. I'll put TP for total paid. Okay.
All right.
Then there is the analysis column that comes after total paid. You get the point. This analysis column, these analysis columns, they are not just going to be 3. It will be dependent on the types of the transactions that you have, the nature of the transactions you have. So for example, the nature of the transactions that you have, some of them, they go for what? They go for, the others are office expenses, others are related to travel, you understand? Then others are related to ledger account. Others may be related to maybe rent. Okay, so whatever expenses, you have those columns. These columns are called the analysis columns. But the good part is that they will be given to you. So I will not overemphasize on them. I just wanted you to understand what they are. So in this case, you have got the office expenses.
Also have travel.
You have travel, and you have the ledger account. Now, what's the need of the analysis columns? The analysis columns are used to tell us exactly why the expense was incurred. You understand, right? Why did you
Yes.
incur expense? So let's start with the date 2023, March 1st, 1st March, or March 1. What happened on 1st of March? Let's go back to the question. Okay. Don't worry. I have to. But you're following, right?
Yes.
Okay. Please, I don't need to lose you this time around. I want you to understand, see the differences between these two things. Let's just wait for the document to open. There you go. What happened on the 1st of March?
Restored petty cash interest from the business
Exactly.
bank account.
Exactly. You restored the first. So to start with, you have got the balance brought down, right? On the 1st of what? March. You have the
What is the
balance. What?
difference between
Mhm.
balance brought down and balance carried down?
All right. A very good question, sir. I will come back to that one. So
Okay.
balance brought down, let me start from balance brought down, sir, simply means the amount that we brought from the previous period. Remember, we are carrying over. It's more like you are a business, right?
Uh-huh.
So as you are doing the business, last month it was maybe the 29. Let's say this month ends on what? Or let's say it ends on the 30th. So on the 30th, when you close the day, you have got less 5,000 in the bank account for the business, right?
Uh-huh.
That is the balance that you have closed the month with, isn't it?
Yes.
As you close the month, that day, that amount is called the balance what? Carried down. Because that's the amount you're going to carry to the next period. You understand, right?
Oh, yes.
Then, when you reach the following day, which is the new month, that same amount, you will call it the balance brought down. You have brought it, you are bringing it from the previous period.
Mm-hmm.
You okay?
Yes.
Okay. So the balance brought down, which is the balance which you brought from the previous period or we started with. We are told that we already had what? $61 already, isn't it? And again, the
Yes.
same day, we replenished the account using the what? The bank.
Yeah, the bank.
Yes. So we just add the remainder, right? The difference. 139.
Okay.
Why
Uh,
139? Where is it
we
coming from?
subtract 20. We subtract 61 from 200.
From 200? Yes, because we just needed the what? The balance only, not every. Understand, right?
Uh-huh.
All right. Now, from there, we need to go to the second, so the other day. We made some payments to Merit, paid $55 to who?
Gile's a trade
Eh,
payable.
a trade payable. You understand, ka? So number one is a payment, which means it goes to the payment side, total paid side.
Uh-huh.
Then when we analyze now the nature of the expense, we ask ourselves, is this part of travel expenses? Does this payment suit to be under travel?
No.
Does it suit to be under office expenses?
No.
No. So it goes under what? The ledger
Account.
accounts. Exactly. So this is how you analyze. I'm hoping you're following. I don't need to lose
Yes.
you this time around. I don't want anyone who does tuitions with me and fail to get an A. I get upset. Girl,
Don't worry.
I need you to give me an A, and I trust you. Let's go,
Yes.
and we have 55 this side. Simple. Then we go to the third.
Uh-huh.
On the third, what happened? We paid the tax fare, $21.
Uh-huh.
So let's analyze the expense. Where is it going?
Travel.
It goes under travel expenses, 21. So that is on third, you write what? Travel, 21. It goes under travel, 21. Now let's go on to the next one, which is the sixth. We paid 18 for notepads and pens. Where does it go?
Under office.
It goes under office, right?
Yes.
So 6. Yeah. This is a notepads and pens. The amount is 18. It goes under what? Office 18. And then what happens next? We have got the receiving cash 25 from Michelle, a trade receivable. Where does it go?
Goes under total received.
Yes, it goes under total received, but when we analyze, does it go in the analysis column?
I'm not sure.
All right. No, it doesn't go in the analysis column because it's not a what? It's not
Payment.
a payment. Here we just take payments are the only ones that we analyze. You understand, eh?
Oh, yes.
You get the reason why it doesn't go there, eh?
Yes, yes.
Because it's not an expense. Then from there on the 7th, we have office cleaning, right? That was
Uh-huh.
office cleaning of 30. Obviously, this is self-explanatory that this goes under office.
Office.
When we get here, you will understand that we have exhausted all the what? All the entry.
Payment.
So we got to balance up this pet cash book.
Mm-hmm.
Let's balance it off. Right? We need to balance it off. How do we balance it off? We just total both sides. So let's press the total. Here is 55, 21,
Uh-huh.
18 plus 48. Oh, 18 plus what? Plus 80 is 48.
Plus, yes. The total will be 124.
Okay, so now let's total paid will be 124. Okay, let's
Yes.
just write 124. Also this side, let's have the total first.
To be 225.
Now, what we do, remember, when you reach here now, we want to balance off the account. Remember how we balance off the account? You tot up the total received and also the total paid. Let's do it uniformly. Yeah, slowly. The total received is what? 225, right?
Yes.
Then the total paid is what? 124, right?
Uh-huh. Yes.
Then between these two, you have to compare. Which one is bigger? So the biggest one, it should be written on both sides, the one which is big. 225.
Oh.
You get the point, eh?
Yes.
225. Now, in between here, on the 7 again, which is the last day of the week, you call this the balance what? Carried down. There'll be a difference between the two, like on the lesser side. No, sir, you're not very clear. Be very clear as a professional accountant. Listen, I am saying on the lesser side now, the smallest side, you have to subtract the total of the smallest side from this biggest amount. So in short, you're saying 225 minus 124. And the difference, you will call it the balance carried down. What's the difference?
101.
101. You put it in between here as a balance what? Carried down. Then this same balance carried down, you write it on the opposite side with the day of the next what? The next period. So from 7, the next period will be 8, isn't it? Will be 8, right? And then you will call it the balance
brought down.
Brought down. But since this is the balance brought down now, it will go to the what? The debit side now, isn't it? Opposite side. 101.
Yes.
You don't, the balance carried down and the balance brought down don't sit on the same side. You know that. And so, sir, this is in a nutshell what a cash book, what's this, a pet cash book is all about.
Okay.
Sir, can you ask questions now? I want you to ask.
Yes, sir. So for the first part there where there's March 1st, why is it we recorded the 61 on the total received?
Oh, it was the balance brought down, sir. Like it's, remember, total received is how much belongs to us, not a payment of made. So there is a receipt that we got from where? From the balance that was brought down. Yes, 61 was the balance brought down from the previous period. Do you remember the question said that when we started just the period on 1st of March, we already had the 61 in our account. So this is the balance brought down.
All right. Then for the office expense, the travel and the ledger accounts, we do not have to do anything to them after we find the total.
No, we have already added them. You just sum them vertically, right? Add them. Just sum in their column. Here we have written 55 because there is only one. If there was another number here, we could have added. Here we have added 18 plus 30. Just add the columns and leave the totals like this. You've seen, eh?
Yes.
That's all. We are interested in these two, the total received and total paid. Now, do you have any questions?
No, it's clear.
You have understood the pet cash book?
Yes.
All right. Let's transition. Let me pause